Catherine Murray's approach when looking at the economy, business, and markets is cutting through the noise to find out what really matters. She's best known as a previous host of BNN Bloomberg's The Close, Market Call Tonight, and Business Day PM. She's interviewed international business leaders, former prime ministers, and bank governors with insightful questions about our future economy. Having spent more than 10 years at BNN Bloomberg and 15 years on Wall Street, including roles as VP of Institutional Sales at Deutsche Bank and associate at Goldman Sachs, she's garnered extensive knowledge on global, sector, and industry analysis, mergers and acquisitions, and the impact of fintech. During the tech boom, she was involved in about 12 IPOs a week, which sounds like an absolute frenzy of deals and travel. And as one of the few female VPs on a trading desk, Catherine has a passion for seeing women succeed. She co-founded North-South Capital, a women-owned institutional investment firm. And today she continues her analysis, interviews, and reporting at Murray Media and Markets Online, which has quickly garnered an engaged following both on YouTube and as a podcast. Catherine infuses optimism, stamina, and resilience in her discussions, relationships, and life. And we're pleased to have her with us today. Welcome, Catherine.
Thank you. And thank you for that intro. Very nice. And hello and welcome to everybody. It's nice to be with you. And I can't wait to hopefully be in person. I think that will happen and hopefully sooner than later. I also just want to mention at the outset as well, just to recognize that we are just so fortunate to be able to talk about what the world looks like today and really what we expect in terms of the recovery, the economic recovery, we hope, because of the tragedy that so many other people have felt, and so many people, I'm sure all of us have been touched by this. So I just want to mention that again, because we're able and very fortunate to talk about the recovery, which I do think that we are in, but there are a lot of question marks, a lot of moving pieces and parts, and a lot of debates going on. So that's kind of what I'm going to focus on today. Questions, of course, surrounding the recovery. What kind of growth should we expect? Has growth actually been pulled forward, as some would say, the bears? And or will we have the roaring 20s? Of course, another focus area for people, investors, companies, businesses, corporations is what's the long-term impact of technology? Of course, technology has been accelerated through COVID. What stays, what leaves? Zoom, online shopping, how that impacts real estate. So a lot to discuss there. But the big overriding question that I'm talking most about to investors and strategists, companies, corporations, is whether or not, and don't have your eyes glazed over because this is really important to get right, is inflation versus deflation or disinflation. And the reason, of course, why that's so important is because it affects the interest rate environment, and interest rates are, of course, the base for asset values, mortgage loans, auto loans, business loans, investment returns, valuations. So this is really where so many investors are spending their time and really trying to get it right. And that's been really difficult to do. I mean, it was only a number of weeks ago where the market was selling off because there was fear that inflation was rising, that the Fed would have to play catch up and raise rates faster, sooner, et cetera. And then now we are looking at a US 10-year yield today at 1.31. So a complete reversal of that fear. So again, a lot of moving pieces and parts. So how do you kind of break it all down? Well, even though times have changed, one of the worst things you can ever have on Wall Street is it's different this time. It's never really different this time. So my approach is not different either. And what I mean by that is I always really do try to gather as much information as I can and figure out what the consensus is. And the reason why the consensus is so important is because it can really have a long-term impact, or there's just so much money flow that flows into that consensus thought. So you can't ignore it. It is part of the rules of the game to look at that. And what I try to do is find outlier thoughts and thinking and thought leaders and to push against that consensus view. And the reason, of course, is because you want to avoid those black swan events. Now, when you think about a black swan event, means they're not predictable. Well, I don't fully believe that. And I'm going to share a little bit of a personal story as to why I don't believe that. Hard to believe, but in 2006, which is 15 years ago, that's what's hard to believe, is that 2006 was 15 years ago. I was at Deutsche Bank at the time, and based in Chicago. I was in New York meeting with a couple of different big investment banks. I thought maybe this is time for a switch. I was in Soho and I bumped into somebody in private equity, strong private equity firm. And he said, "Oh, Catherine," I bumped into he and his wife and their baby in a stroller on the cobblestones of Soho. And he said, "What are you doing in New York?" And I said, "Well, I'm going to meet with Morgan Stanley." And he goes, "Oh, no, don't go there." I said, "Okay." And he said, "Well," and I said, "Well, I'm also going to meet with Bear Stearns." He said, "No, don't go there." I said, "Well, maybe Lehman. I just thought maybe it's time for change at a Deutsche Bank." And he was so negative, and I couldn't figure out why. I mean, some people aren't favorable towards investment banks. I personally had an amazing time and career there. But now, it was actually maybe 18 months after that meeting, we found out why he was so negative. He was at Paulson and Co., which was one of the probably 4 firms in the world that made billions and billions of dollars off of the housing financial crisis. So in other words, trying to hear what somebody with a softer voice might be saying or thinking or showing, to me is really important. So that's why I always look at the consensus and the edit consensus, because I do believe that you can try to figure out what a negative event might happen and what it might be. So with that said, and how do I go about doing that? As Teresa said, I spent a lot of time on Wall Street, great relationships. It's fun to see all of my friends now. I can't believe we're, older, but we are, and they're running these firms, running the show, building companies. I also oversee our family office. So we have access to really interesting people on the private equity side, venture capital, even content. So a couple of years ago, learning so much about that shift from linear to digital, and of course, being on television, I was like, what? It's still TV, and it's probably a bit of a hybrid. But anyway, and of course, I think so many people are searching for yield. Now, that's all a little bit on the investment front, but I think what's important for everybody to recognize that in all those different verticals, you've got access to so many different sectors and companies and corporations, that you can think about. And all of them really are impacted, obviously, by the environment. If inflation is higher, that's good for some companies, not others. They got pricing power, they can pass it on to the consumer. So again, going back to the inflation deflation debate, that's just kind of where I'm going to start. And then there's going to be other areas that we can pick up on. Right now, I think that the consensus call is that we will see an economic recovery. Some saying the roaring 20s because rates are lower for longer. Fiscal policy is very supportive. Monetary policy is supportive. Vaccination rollouts are going well, and hopefully we have herd immunity coming. The other side, though, the bear side, really centers around the massive amounts of debt that's been created in the world. That is deflationary. And the reason why this is so important is because if we went back to the financial crisis, 2008, we've been printing money, having rates lower for longer for an extended period of time. And now in the United States, as an example, $21 trillion in debt. But if you actually add all the debt, it's maybe $80 trillion. And we've not seen any growth, significant growth, even pre-pandemic. And we didn't see any inflation. So what does it mean if we keep printing money? It just means more debt, deflationary, slower, lower growth. That's the bear case, and that could lead to increased taxes, among many other implications. In terms of the inflation picture, sure, we're seeing some inflation. It is coming from higher oil prices. We, of course, have bottlenecks and supply side issues, semiconductors for one. But will we see runaway inflation? Will the Fed, the US Federal Reserve, have to raise rates at a faster pace? And will that lead the Bank of Canada to raise rates at a faster pace? Another aspect that we have to think about when we think about monetary policy right now, and this is something I'm having more and more conversations about just even the past couple of days with economists and fixed income investors, which I don't know that it's making a lot of headlines, so I want to really highlight it to you, is MMT, or modern monetary theory. And this is where countries that issue their own currency can never run out of money the way people or businesses can, because they keep printing money. it was a once an obscure conversation. AOC is a believer in this. Bill Gates, Powell are not. Larry Summers as well. And there are repercussions of just printing money. Again, we talk about sizable debt that is not good for growth. So again, you want to think about what all this printing of money means for your growth opportunities. And there are always opportunities, but just recognizing where they might be, there might be a smaller set, there might be still great growth opportunities, but I think you've got to be very focused on where they might be given what's going on from this macro perspective. Keep in mind as well, when you think about the fiscal policy, the checks that have been written, that was really more for survival. It wasn't the New Deal per se. It wasn't necessarily going back into the economy the way FDR had it planned. So in other words, it's not supportive of growth. Another aspect to be mindful of. When we think about inflation as well, the Fed's done a pretty good job, the US Federal Reserve, because that's the one that we're going to hear a lot about in terms of calming those fears. But again, it's difficult right now to know the direction, but this is where investors and businesses really have to pay a lot of attention to because of the size of the debt that's been piled on since 2008, and it might keep going. When you think about the economic outlook in that scenario, interesting statistic I heard just the other day, in 1967, the Dow was at 1,000. 15 years later, the Dow was at 1,000. So again, we got to get it really right in terms of what the growth opportunity looks like, and within that subset, where there will be opportunities. Right now, I would say at this point, it is still undetermined. I would say, though, that the consensus is maybe for a little bit of a pickup in inflation, for a nice economic recovery. The looming dark cloud, though, which is the out of consensus call, is what this massive amount of debt actually does do to the economic growth prospects, maybe 5 years, 7 years down the road. What I'm hearing as well from investors who are looking at this, what are they watching? That's always important. From a fixed income perspective, they're watching credit spreads. I won't go into the nitty gritties of that, but they're watching the credit spreads to see if they widen out. If I'm talking to a balanced money manager, how he's trying to make returns for his investors, he thinks it's going to be difficult. He's going to gear towards 4 to 5% return. He thinks that's going to be achievable, but he's going to have to do it in more. And speaking of that, keep in mind that because of this lower for longer interest rate environment, a lot of people have gone up that risk curve. So, if things end up being the opposite, you could see an unwind of some of those asset classes. Again, this is still a bit of an unknown, but something to watch. Also, when you think about that inflationary call that's out there right now, I would just be mindful that when you hear President Biden raising the minimum wage by a couple dollars, it really only affects 2% of the population. So it's not necessarily inflationary. So that's kind of the top-down macro conversation that people are having. I would say just to wrap that part up, the consensus call is that there will be economic growth. It should look okay. The out of consensus call is that the amount of debt and money printing will cause growth to be slower than people are anticipating. So that's the top down. In terms of some of the impacts that we're hearing about and people really care about from the COVID perspective, has to do with disruption and innovation and opportunities. So, who would have known that? I think it was the first quarter of January 2018, I was doing an interview on BNN, and he was a very nice, seemed almost humble gentleman talking about his video conferencing company. And I was trying to understand, why is it so different? Why is this important? Why do we need it? I didn't think that many people did video conferencing. Well, who knew? It was actually the founder of Zoom. So obviously that's been one of the biggest disruptors, and my goodness, what would we be doing without it? The question, of course, when we think about COVID is, Is it here to stay? Is work from home here to stay? What does content look like? How do you advertise? How do you get your messaging out? We're also, of course, thinking about cryptocurrencies and digital currencies, given the fact that there's been so much money printing. And then also real estate values have been high. We're seeing people move out of urban areas. Will that stay? Also, of course, when you think about the markets, that Reddit investor, that retail investor that's participated and really moved markets, which has been pretty incredible. So those are some of the key other areas that when we think about COVID and what happens next, those are real focus points and focal points for people. Just to kind of start from that work from home. We, of course, have heard from Goldman Sachs and JP Morgan that they're ordering people back to work. The thought there is, if you can go to a restaurant, you can go back to work. But what does that work environment really look like? Will it be hybrid? We've certainly learned that there are efficiencies to not traveling to work. There are also inefficiencies to staying at home. If you've got a lot of kids or dogs or puppies running around, there might be some productivity enhancements from staying at home. But of course, where's the culture, where's the collaboration, and where's the mentorship? So I think the consensus right now appears to be that it will be a hybrid solution. I tend to believe that it will be more back to work. If you're a young person, or depending on where you're at in your career, you probably want to be in the head office and making sure that you're being seen. I mean, that's just the way it is. The unintended consequences, I fear, will be for the flexibility, which I think is really needed for a woman, but it has been a she-cession. And I do fear that for those who are allowed to stay at home, that there will be a case that will be made for lesser or lower pay. And again, that goes back to the inflation deflation conversation. And that, of course, would be deflationary. Away from that, many people say business travel won't come back. I would suggest to you, watch your competitors and see how many are booking their airline seats, because I still think in person is going to really matter. In terms of content, this is really interesting to me, because who knew that, my goodness, during COVID, you could actually film an entire live show from home. And, you can figure out the technology, and you can figure out your own lighting, you can figure out your own makeup, and we've got the technology to do that. Again, deflationary, if you really think about it, because do we need all those huge studios? Do we need all the people? I would say, yes, it would be nice, but it will be a big decision for companies to make. The other important aspect to content and social media is the power probably that all of those mediums have had over the past year or so, 18 months. And, when you think about the online ways to get your message out, to advertise, when there's a news item, I mean, many people go to Twitter. That I think really has some legs. They also go to YouTube, LinkedIn, just to name a few. I think that is here to stay. And I think that more and more companies are trying to figure out how to use them to their benefit. The other areas of focus, of course, cryptocurrencies. When we think about the printing of money, everything is interconnected. I guess that's what I love about this conversation as well. When you think about cryptocurrencies and people getting nervous when the government say they're going to intervene, the reason why cryptocurrencies or Bitcoin exists is because they don't want the government to intervene. And I don't think that they're able to intervene in Bitcoin or Ethereum blockchain. Governments might have their own digital currency, but I still think that that's different from the crypto world. And I think that that is here to stay. Now, whether or not store a value or a currency, that is still, from a consensus perspective, an unknown. I would say that the consensus believe that that it will never be a currency and that it's a bit of a sideshow. I disagree. I think that we are in the infancy. I don't know if if Bitcoin will be the currency, but I think something will be. And many people say, well, that can't be the case. It's too volatile. Others would say, the bulls of a cryptocurrency would say, in any beginning of a currency, there's always volatility because you're trying to find price discovery. So I think that coming out of all of this printing of money and perhaps even more printing of money, that crypto is here to stay, and you're hearing more and more companies get on board with that, and really the digital wallet. So that's something to think about if you're a company out there and what you need to be offering your consumers, your clients, your customers. And of course, another trend that's been debated about is real estate. Are we seeing peak valuations in real estate? And again, valuations go back to the interest rate environment. goes down, valuations go higher for the risk on assets. And the opposite is true as well. So that's why we want to know if there's inflation, if rates go up, are the valuation of some of our assets, maybe we've overpaid. In terms of real estate and everybody moving out of the urban area, I think that will still be desired. But in my conversations with CEOs and developers, CEOs of real estate companies and developers, it's amazing to me what they're seeing and what they're hearing, which is in new developments, 95% is sold out. And I said to one CEO recently, I said, who's buying? Who is buying? Like, is it who? And basically it's people who have like a 5-year time horizon. So again, it's prudent to perhaps, again, cut through the noise and look to the long term, medium term, long term, and understand what some of the volatility could be. I think that people are going to continue to love and want hard assets. I don't think that's going away. And I also think that you'll see a move out of higher tax jurisdictions, which is exactly what you're seeing in New York with people moving down to Miami and seeing that market take off. I think that that's something here to stay. The important aspect too, when we think about tax jurisdictions, is that if in fact, going back to the MMT, modern monetary theory, if you print money until you get full employment or inflation, the way to then claw that back is through higher taxes. And that's also getting talked about. Kind of just lastly here in terms of the other trends that people are looking at. I don't know if you've been following the AMC stocks or the GameStop stocks, but the retail Reddit investor has definitely, who's out on those chat rooms impacting stocks. That's going to be really important if you're a publicly traded company to understand what that market looks like, how they're moving the stocks, how they're able to, what you can do about it. I think it's here to stay. The consensus believes that it is not here to stay because they'll blow themselves up. They won't have the money because they never really did because they were just using options. And then they'll go back to work. They won't be sitting in their bedroom. I kind of think that people, and I like this aspect about it, have gotten not used to, but I think that they've liked the idea that in addition to their income, they can make money in the market. And I think that's really great. I think that that's the democratization of the markets, and I've always hoped for that. I hope it continues, and I hope it continues in the right way. So I think that that is here to stay as well. When I now just kind of think about concluding here a little bit, what I watch for right now, the conversation right now, it is inflation versus deflation. That's right now. I think the second half is going to be a little bit more focused on taxes, both in Canada and the United States. I think that there's a lot of opportunity out there. I really do. I think retail for one, but a certain type of retail. Some of the retail stocks have done incredibly well, consumer discretionary, those specifically on clothing. We haven't bought clothes really for a number of years now. And unfortunately, the average, a weight gain is about 30 pounds. So there's that aspect. I also think that there's opportunity in oil and the energy sector. And I say that because there's been, the industry's been vilified for a number of years. There hasn't been a lot of build out or CapEx. And that's why you're seeing this supply squeeze. And I think that we will see an increase in demand. I also think there's opportunities in industrial REITs as an example. I'm kind of getting into the nitty gritties here, but bigger picture, there will be, given the volatility in expectations for inflation versus deflation, there will be some mispriced assets. And I think that that's where you have to search. You have to search for where value opportunities have shown themselves. Bottom line, I guess, for small and large cap companies, I think that the use of technology will make people and companies perhaps more profitable and make small companies have a maybe more level playing field in terms of being able to be nimble and use technology and get their messaging out and get it out on an uncostly basis or a profitable basis. And I think that, at the end of the day, we are all very much looking forward to some excitement, change of pace, respecting what we had before, the experience. And I think that that is going to be a real tailwind for the economy. I, of course, the world is built by optimists, and being on the sell side on Wall Street, that means I am an optimist. I'd love to say it's the roaring 20s, but I would take stable, longer term growth over the roaring 20s. That is for sure. A lot to go through, I think, different aspects to look at when we think about COVID, the recovery and the outlook. I'll hand it back to you.
Thank you so much, Catherine. You have given us a lot to think about, and I appreciated the approach from the kind of macro down to some specifics and encouraging news about the consensus mindset about recovery and in-person coming back. So especially for our industry, that's great news. We do have a couple of questions that have been coming in. So we've got a few moments to cover those off. We've got a question from Rick wondering about how do you feel about investments into infrastructure renewal and expansion and potentially done by increasing federal debt?
Well, I think that it's almost good and bad, right? I mean, I think that it goes back to the New Deal, and that I think that it can be positive for growth. Absolutely. I think at the same time, we have to make sure that it is done correctly. And so what does that look like? Does that mean it's private? Does it mean it's public partnership? Is it private public partnership, which probably would be a good solution? Is it just publicly run or privately run? So it does come down to execution as well. I think the idea is a good idea. And I just think that we have to make sure that the amount of debt that we continue to create for different goals has accountability, has absolute accountability. And if it does, then I'm all for it.
Great, thank you. There's a question about alternative investments. What are your views on alternative investments as a way to diversify your portfolio and potentially accomplishing a low correlation to equity?
100%. Running the overseeing the family office, we've been doing that for a number of years now, and it has worked out very, very well. What I love about what's been going on in the marketplace with mutual funds and investment banks creating products that now more people have access to as it relates to alternative investments is key and critical. And, often it's only accredited investors and pension funds that have access to that. I think that individuals must have access to that. And you have to be smart about it. Don't just go out there and, a lot of people say I can get you a 12% return. Well, you got to really, and I do this all day long. You're going to give me a 12% return. What's the real risk there? So you must understand what the risk parameters are that they're taking to get you that 12%. And by the way, should it really be, and I always push back and I say, well, is the risk that you're really, putting me out at, should I be getting 18%? So, buyer beware, but I think that there's lots of good products out there. And I think that absolutely you need it for your portfolio and a diversified portfolio. Keep in mind though, when you do see events like March 2020 and the markets sell off dramatically, I had this conversation the other day, you often see all of the asset classes down, and then you'll say, well, what happened to my correlation or my lack of correlation among asset classes? Give it a moment to then rebound. I think that, I don't necessarily believe that markets are efficient all the time, but you will likely see them rebound as the way they are supposed to. So I actually think that, and I want to just say one more thing on this front. I think that hedge funds right now are a good place to be as well. There's so many other asset classes as well, of course, not just hedge funds in the public equity markets, but private for sure, and real estate and even crypto, is diversifying as well. But I want to just point out, as it relates to equities, that and I've thought this way for at least a year and a half, that it's not a stock market, but it's a market of stocks. And I think you have to be very specific and understand what stocks you own. And I think that more and more people are actually having concentrated portfolios and really understanding why they own certain stocks and believing in that story. I think that's important.
Fantastic, great approach. Thank you. A couple of questions about emerging markets. So along those lines, there's a question, if you're lucky enough to have some money to invest, what new or emerging areas would be important to watch?
Well, that's a tough one. And, you have to be, first of all, hire somebody who knows the area very well. And that's one thing that we do. You cannot be an expert in everything. So I like to have somebody who's the best in fixed income, the best in energy, the best in emerging markets. But what I would say too is, as an individual, I mean, you can sit back and do your own homework as well. So a number of years ago, from an emerging market perspective, I said, look, we don't have enough in China. We just don't. And so, you can figure out, well, why don't I own Baidu? Why don't I own Alibaba? Why don't I own Tencent? So from an emerging market perspective, and figuring out where you want to be, we know the size of China, and we know what some of those companies on the US side have done. So want to kind of look to replicate that in other areas. Now, of course, they have very different rules and regulations, and you can see that with the DDIPO, which is China's Uber, which listed in the United States and then had some issues with the China regulators, and stock dropped like 25-30%. So you have to understand those parameters when it comes to emerging markets. But for right now, I mean, I always look, and I think you always should, and I think that you should look for somebody who has real expertise and a love for those areas.
Thank you for that. And you actually rolled in an answer to, there was a question about Didi and Chinese-based companies. So you got 2 in 1 there. Thank you. And we'll go with one last question, again, about emerging markets. Any thoughts about the NFT digital asset, digital art market space? Is that here to stay along with crypto, or is it all just a bit of a bubble?
I have to say that that's one area that I'm letting settle out first before I spend a lot of time looking at it. I can understand it though from a blockchain perspective. So to answer the question, is it likely here to stay? Likely. But I think as well, when you think about any of these areas of the market that might feel or look like a bubble, one of the things I am going to focus a little bit more on in terms of Q&A for, for investors is whether, like when I do interviews, is whether or not, is it a tulip mania or is it going to be Main Street? And I think that that's the way, when you sit back and you look at some of these things that, really kind of take off, it is a good kind of perspective and prism to have.
Wonderful. Thank you so much for your thoughts today. Again, you've given us a lot to think about as we're running our businesses, whether they're large or small, some of the trends that are coming, and knowing what the consensus is, as well as ways to think outside of that. Thank you again, Catherine, and to everyone who joined us today. We appreciate your time and engagement in the program. Wendy says, so insightful. Thank you. Rick says, thanks very much. We will provide a recording in a follow-up email that will be available for a limited time. And as always, we're here pretty much every 2 weeks. Our next session will be with mental health and wellness advocate Bea Kwame later this month. And we are always here to help you find great speakers for your next conference or event. Thanks for joining us. Take care.
Bye.
Bye-bye.